right, guys, welcome back to another weekly report. It is the 11th of March, 2021. And as always, we have a look at the US 10-year Treasury yield. But typically, you want to be looking at the unholy trinity, which is the US oil, the bloodline or the lifeblood of the hegemon, the US, and the Dixie, the dollar, which the whole world is pretty much reliant on, and then obviously the bond market, what is actually happening. So we had a slight pullback yesterday, and I'll show you the indicators why this is and what is actually driving the market now, where money is kind of floating about, and we'll show you just some correlations, well, inverse correlations, in terms of how this actually affects the gold, the commodity side of things, how oil has been affected, and things like that. So if we have a look yesterday, so Treasury yields remained well below their highs for the day, Wednesday afternoon, after the US sold 38 billion of 10-year notes with little disruption to the market. I'd say there was a bit of a disruption. I wouldn't say there was a little disruption. So it's kind of underplaying that, Barons. So, but we'll dive into that in a bit. If we go down here, by the way, they actually going to be auctioning off more Treasury bonds. I think the 30-year, if I'm not mistaken. So just have a look out for that. If you're in the US, they'll probably most likely do it again this afternoon, or your afternoon. And if we go down, another factor that likely helped the auction was the latest inflation data published Wednesday, excluding volatile food and energy prices. US consumer prices rose more slowly in February, and the economists expected, according to the Labor Department's latest Consumer Price Index report. So inflation erodes the value of long-term bonds, so the weaker than expected reading may have boosted demand. So these are key indicators that happened in terms of the auction. There was actually a good reception. There was demand for this auction. So that gave a good indication in terms of where the states is in terms of inflation, and also the consumer price index. So the consumer price index measures the change in the price of goods and services from the perspective of a consumer. It is a key way to measure change in purchasing trends and inflation. So a higher than expected reading should be taken as positive or bullish for the US dollar, while a lower than expected reading should be taken as negative, bearish for the US dollar. So it's currently, it came out at about 0.4%. So it's a very mild inflation that's taking place there. So consumers are spending. Inflation seems kind of tamed right now in the US economy. So this is going to have actual ripple effects in terms of your stocks, growth versus value type stocks, also the commodities, what's happening there. So there were ripples, and we'll start going into that in a bit. Another positive indicator that came out was the House passes Biden's 1.9 trillion COVID relief bill, projected to slash US poverty in 2021 as it happens. And this will, Biden will sign the coronavirus relief bill on Friday. So effectively it will come into law on Friday, and this should open up the floodgates of 1.9 trillion US dollar relief that will be flooded into the economy. And as mentioned, this is all going to go into stocks, cryptocurrencies, you name it. But we need to just jump back here. Okay, so this particular line over here is the iShares financials, and that is your banks. Okay, so your banks, and this is where money was. Okay, money was flowing when the 10-year Treasury yield rises. Typically, the money starts flowing into like your financials and your energy markets, and this tells us this is where the smart money was. There's a slight little pullback. So when this pullback happened, the opposite starts to happen, and the money starts flowing back into the tech. And this is why you're seeing an upsurge. Okay, this is now between value stock and in terms of growth stock. So this is where you've got to look at positioning yourself now. So money was flowing into value stock. It appears now with all of these indications, inflation seems to be a little bit tamed right now. You've got stimulus coming on its way. I would not be surprised that the NASDAQ itself is most likely going to get back into this rising wedge, and let's see what happens. But money seems to be flowing for now into the tech stock. And if we go over here, you can also see the ripple effects now going into the Asia. So this was today, early in Asia, an index of regional stocks, excluding Japan, rose 1.7%, led by a 2.3% surge in South Korea's Kospi, and was on track for its first 3-day advance in 3 weeks. Again, this is money going into tech stocks. So there was a ripple effect. So I don't know why the Bureau said unnoticeable, well, little disruption. It was actually quite significant disruption that actually took place. Now, I want to show you the correlation, if I go here, actually between gold and how this affects commodities. So this is the gold and this is the 10-year Treasury yield. And you can typically see that they are inversely correlated. Now, this is what happens when the 10-year Treasury, well, when the Fed starts to put in 10-year Treasury curve control, then you start getting a correlation between gold prices and actually the curve itself, as you can see over here. So just watch out for that. Just watch what the Fed has to be saying. Watch what they're doing. If inflation starts to carry on going up, you're going to see gold going a little bit more down. And you'll start seeing words coming out from the Fed in terms of talks like yield control. If they start doing talks like that, you know that there's going to be, again, another correlation between gold and the yield curve. And they'll be a little bit more in sync, not inversely correlated. Then, if we have a look, we saw the the oil had a nice little spike. As recalled, it shook off the shooting star and it went on a very nice rally. It is also, it hits a multi-year resistance level. If I pull this back out, you'll actually just see. So resistance, 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 resistance. So support there, but ultimately resistance, resistance, and resistance. So that's currently what's been play. But as mentioned, I believe that oil is going into a 12-year cycle, bullish cycle. As you can see, it went through a horrendous downhill bearish cycle all the way from back 2018. Looking at your downward wedge, it's rallied out and it's getting a little bit of resistance right there. If it breaks through, then oil is pretty much on its way. So if we had a look, there was a catalyst as well with regards to that little bit of rally. And on Sunday, oil prices rose above $70 after attacks on Saudi oil facilities. I believe there was actually a drone attack that hit the world's biggest crude exporter. There's also the OPEC reports that is coming out, so I'm just yet to find it. But I believe that the agreement there is that they're going to control the pricing and the supply of oil, and they're allowing more U.S. Drilling to take place. So I believe that has been the agreement. So it sounds like Russia didn't get their way in terms of them being the main suppliers into the market. But I'm just yet to see the reports happening on that one. Right, if we have a look at the crypto market, one of the biggest stories right now is Ethereum's miners plot a hash power show of force against EIP 1559. And that's the new protocol that's coming out for Ethereum. And what that is in relation to is amid the backdrop of ever escalating Ethereum fees, the Ethereum improvement proposal seeks to replace the network's existing bidding-based fee market with fixed price and burning mechanism. I'm actually against this entire proof of burn concept. It's an inconsistent concept. I have no cooking clue why Ethereum thinks that this will actually work for them, because ultimately you're taking away supply and demand. I mean, you are effectively eliminating supply and demand. There's no talk for it now, because you're burning your coins. Ultimately, there's going to be no supply of Ethereum and no demand at the end of it. So I don't really like proof of burn. As my personal opinion, I believe it is an inconsistent model. I mean, stick with your model. You can get creative in terms of escalating fees. I mean, you don't need to employ this type of model still to try and drive, the demand for Ethereum to skyrocket. It's doing well as it is. You can be creative with that. So I am supporting the minus plot. I think they need to do something about it, because ultimately they are going to lose at the end of the day. So you guys needed to show support to these guys. So this will be a fascinating story to see how this pans out. The Bank of Russia eyes digital Ruble prototype in late 2021. So CBDCs are pretty much on their way. Russia is experimenting. We know China has been experimenting. In fact, the Chinese and some of the Asian countries have had a talk about producing kind of like an Asian CBDC coin itself. So this is where the trends are heading. I can only imagine Africa will eventually start jumping in. We'll see South America start jumping in. The US, we know they're looking into it. They're doing their investigations. We know Europe is looking into it. So this is coming. So have a look at that. This will be in the link if you guys are quite interested in that. And then we will pick the tweet of the day, which is the IPO listing yesterday of Roblox, which I thought was pretty cool, because my kids are absolutely obsessed and addicted to Roblox. And I think it's actually their birthday next month, and I'm thinking about getting this for their birthday presents. I mean, how many kids can say that they own a share of Roblox? So this to me was pretty cool. I actually do play the game with them. It's pretty cool. And I thought the news was pretty cool. So if you want to have a look, I'll put this in the links as well. It seems to have done well in its opening debut. But this has actually been one of the sought after listings, if I can put it that way, for 2021. It has stirred a bit of a buzz. It's a pity they don't really do dividends right now, because if they did, I would actually end up buying quite a bit and just make some money off the dividends. All right, guys, so that's pretty much what has been happening in the markets. Let's look at what is happening tomorrow, particularly with the 1.9 trillion coming into effect. This is going to start having a bit of a play on the market. Just have a look at gold correlated to the 10-year Treasury yield. Have a look at what is happening to the oil. Keep your eye on that, because a rally is coming. Have a look at what is happening with the dollar. With regards to consumer spending, there will start to be demand for the dollar. So just have a look at those prices, fluctuations, what's actually happening, and then from there, just have a look, see what is happening with your value-based stocks like your banks, and see what is happening on the other side in terms of growth stocks. And from there, you'll start to see where money's starting to flow. But by the looks of it, just to wrap up, we are seeing it flowing back into the tech growth stocks. So I would not be surprised if this goes back into its wedge before we see a heinous, epic drop down and inflation skyrockets in and doom and gloom hits the world. So that is my news for today. Market recap. I hope you guys enjoyed the segments. And yeah, peace out.